Hello, welcome to our monthly performance monitor. My name is Barney Hawkins, Investment Director at True Potential. October was a good month for investors, with markets continuing to climb higher. Despite warnings from certain commentators that equity valuations look stretched, global equities gained 2.9% over the month, with the UK up 1.8% and the US up 3.3%. Fears of monetary tightening and higher interest rates in both the UK and the US were eased by reassurance from central bankers on both sides of the Atlantic that any move in rates would be small, gradual, and well publicised ahead of time. The Bank of England played down concerns that any rise in UK rates might mark the beginning of a long-term trend, while in the United States, the third quarter earnings season offered further reassurance, with the majority of companies reporting profits ahead of expectations, and results from some of the large tech companies like Google, Facebook, and Amazon being particularly impressive. In Europe, the ECB announced that it would reduce the amount committed to quantitative easing each month. However, it also promised to keep the program going for longer, and so despite the attempted secession of Catalonia from Spain, European markets were spurred on by the prospect of continued QE and low interest rates, ending the month up 1.5%. In Japan, the re-election of Shinzo Abe as Prime Minister was greeted enthusiastically by the markets. It is true that deep-seated structural problems remain in the country, not least an aging population. However, Abe's unwavering commitment to continue printing money to stimulate economic growth and to generate a modicum of inflation went down well in a world that is, for the most part, steeling itself for the gradual tapering of QE and a raising of interest rates. Boosted by Abe's re-election and the continuation of current economic policy, the market jumped 5.4% over the month. Elsewhere in the Far East, a dominant performance by President Xi at the Chinese Communist Party conference not only cemented his own position within the party, but also underlined China's growing ambition to be a world leader rather than just a participant in the global hierarchy. Reacting to this confidence, Asian markets were also strong, gaining 5% in October. With so much attention focused on central banks and the prospect of a move up in interest rates, we might have expected bond markets to be under pressure. However, bonds continue to provide a useful counterbalance to fully valued equity markets, and gilts nudged up 0.3% over the month. Rising inflation helped index-linked gilts climb 1.7%. While markets are undoubtedly high by historic norms, substantial cash sums remain on the sidelines waiting to be invested, and this is keeping volatility in check. With interest rates likely to remain low for some time, central banks moving very cautiously, and corporate profits continuing to impress, equity markets should continue to hold their own. Thanks for listening, and we'll see you again next month.